I want to tell you about a couple I worked with. They're 18 months from retirement, and they just discovered a $380,000 tax problem they didn't see coming. Their advisor told them to let it ride in a 401k. Now they're trapped. Have you ever stared at a massive IRA balance and wondered if you're going to get crushed by taxes in retirement? Smash that like button if you have. Drop a comment. What's keeping you up at night about your retirement taxes? Here's what you need to know. The 2026 sunset on tax rates? That's a myth. It's already extended. Most advisors are still planning around a deadline that doesn't exist anymore. So stop there. The real game is about timing. It's about converting money during your low-income years, like a sabbatical or when the market dips hard. The arbitrage isn't about a law expiring. It's about your life. Each conversion has its own 5-year clock. You can't just assume one 5-year rule covers everything. If you convert today, that conversion clock is separate from any future conversion. Details matter. They cost money when you get them wrong. If this is making sense, hit that subscribe button. We're about to walk through a framework that could save you tens of thousands of dollars in taxes over the next 30 years. Okay, let's get specific. A Roth conversion is math, not magic. You take money from a pre-tax account, like an IRA or 401k. You move it to a Roth. You pay the tax now. Then it grows completely tax-free forever. Here's the sequence. First, calculate how much you can convert before jumping into a higher tax bracket. That's your conversion capacity. Then you execute a direct trustee-to-trustee transfer. Fidelity to Fidelity, Vanguard to Vanguard. Clean. Simple. Then you pay the tax with cash from outside the retirement account, not from the conversion itself. And here's the math that makes it work. Imagine you're married, filing jointly, with $150,000 in taxable income in 2026. Your 24% bracket has room for $51,000 in conversions. 51,000 times 24% equals $12,252 in tax today. You just turned a $51,000 tax problem into a tax-free solution. The break-even on that tax bill? Typically 7 to 9 years. Now, if you're sitting on a massive 401k balance, you're probably thinking, won't this push me into the top bracket and trigger Medicare surcharges? Yes, it will, if you do it wrong. A lump sum conversion is almost always a mistake. Here's the strategy that works. Don't convert everything at once. Perform a series of smaller, strategic conversions over several years. Specifically in years where your income is temporarily lower. You're filling up the 12, 22, and 24% brackets without touching the 32 or 37% brackets. I'll give you a real example. Eleanor, a software architect, 52 years old. She normally makes $350,000 a year, but she planned a sabbatical for all of 2026. Zero income. That's the window. We converted $105,000 from her IRA. After her standard deduction, the entire conversion was taxed at just 12 and 22%. Total tax bill, $16,500. Had she done this same conversion during a working year, the tax bill would have been over $38,000. One sabbatical year saved her $21,500 in taxes, and she locked in $105,000 of tax-free growth for life. Everything I just explained about conversion strategy, there's a full guide and a free calculator in the article below. Link is in the description. It's completely free. Go grab it right now and run your numbers. Here's the framework I use with clients. It's called the R.I.S.C check. This is your personal conversion window finder. R is calculate, your current marginal tax bracket versus your future one in retirement. If your future rate is higher, that's a green light for converting. I is offset. Can you pair the conversion with something else? A business loss, capital losses from a taxable account? You're trying to minimize the final tax bill. S is navigate. Check Medicare IRMAA surcharges. Look at ACA subsidy cliffs. A higher income from your conversion can cost you way more than just the conversion tax. You've got to look at the whole picture. C is verify. Understand your 5-year rules. Are you compliant with IRS Publication 590-A? One mistake here is costly, a 10% penalty plus taxes. And finally, E is execute with precision. Trustee-to-trustee transfer. Cash outside the account to pay the tax. Number 60-day rollovers. No shortcuts. If you're doing backdoor Roths, you've probably heard the pro-rata rule will destroy your plan. It's a landmine. But here's what most advisors miss. There's a clean, legal way to sidestep it completely. The pro-rata rule says if you have any pre-tax money in any traditional IRA, your conversion gets proportionally taxed. You can't just convert the non-deductible part tax-free. But here's the unspoken truth. Most 401k plans let you roll in money from your IRAs. The fix is called a reverse rollover. First, instruct your IRA custodian to roll all your pre-tax IRA money directly into your current employer's 401k. Now your traditional IRA has only your after-tax basis. You convert that to your Roth, and because there's no pre-tax money left, the conversion is basically tax-free. The pro-rata rule is only a problem if you leave pre-tax money sitting in an IRA. For most people, the fix is as simple as moving those funds into a 401k before your final conversion. Here's what I want you to do. If you have a backdoor Roth in your plans, check your 401k documents. Look for 3 phrases: after-tax contributions, in-service distributions, or in-plan Roth conversions. If your plan has those, let me know in the comments. And if you know someone who's sitting on a big pre-tax IRA wondering how to fix it, send them this video. That's your most powerful move. So here's what's true. The most powerful Roth conversion moments aren't dictated by law expirations. They're dictated by your life and the markets. An income dip, a market correction, years where you have room in a lower bracket. Those are your windows. If you're within 10 years of retirement, start small, strategic conversions now to lower your future RMD bond. If you're anticipating a sabbatical or a job change, that's your golden window. The article has everything: the R.I.S.C checklist, real math examples, a free calculator that shows you exactly what your conversion would cost. It's all there. Click the link in the description. And here's what I'm asking. Leave a comment with your biggest conversion question. Are you worried about Medicare? Unsure about the 5-year rule? Confused about the pro-rata rule? Let's talk about your situation in the comments below. I read every single one. Thank you for being here. Subscribe for more strategies that actually work.